Hey everyone, happy Wednesday from Orlando, Florida. We're on location for the final bar today. Today we're going to feature part two of my three-part series, a pilot's guide to investing. We're going to talk about awareness and how to be aware of what's happening around you as an investor. So some really good tips coming up on how to improve your process and your thinking there. Also share a little bit of my conversation with Chris Ciovacco. He's a portfolio manager based in Atlanta that we caught up with yesterday. Some really good comments about long-term secular trends. So ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to this special Travel Week edition of the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com. Not coming from Redmond, Washington, but today from Orlando, Florida. So we have a travel week, a fun week on the road for the StockCharts TV team. Spent a couple days in the Atlanta area, did a number of interviews with some fantastic strategists, spoke to the CMT Association there in Atlanta last night. And we just traveled to Orlando today, and we're getting ready for the Money Show, which kicks off tomorrow evening here in Orlando. We'll be there for a couple days, again, gathering some really good content from some prominent strategists and experts. And just based on the conversation we've had just in the last 24 hours, we're really, really excited to get some of that content in front of you, including today. We're actually going to share part of our conversation with Chris Ciovacco yesterday. He's a portfolio manager based in the Atlanta area. Does a really good job thinking about long-term secular trends, thinking about demographics, secular bull and bear cycles, put everything sort of into a good context for us. So really excited to share that with you later today. Quite the rebound today, and led by an unusual candidate for leadership, energy, right? Which is sort of a different take than we've had. So we have a rebound in commodities, rebound in oil, rebound in energy. So we're going to unpack some of that when we get in a bit, when we get to the market recap. Think about how some of those themes are evolving. And again, what today's rally, closing to new highs for the S&P, what does that mean for the long-term trend? Are we continuing further higher, or are we still in pullback mode? We'll try to answer those questions together. In terms of what's coming up on the Final Bar and on StockCharts TV, as I mentioned, we're at the Money Show here in Orlando for the next couple days. So we'll be broadcasting the show live today and tomorrow, and look forward to gathering good content for you. Coming up next week on Monday, February 10th, Grayson Rose, who's the Vice President of Operations at StockCharts, is going to be joining us with a new function called the Symbol Summary, which includes fundamental data, including earnings, valuations, other really cool stuff that is a long time coming on the StockCharts platform. He's going to walk us through the new functionality and how you can use it. Coming up also on February 10th, on Monday, we're going to be releasing our new show, premiering Behind the Charts, which is featuring some of these interview-style conversations that we've been having. And again, we're really enjoying the conversations we're having. We're really finding that a lot of the viewers, a lot of you are enjoying getting the insights from some of these the different perspectives. So look forward to creating a weekly show focusing on that. Then, if you mark your calendar, next Thursday, February 13th, is our first YouTube live Q&A. So go to our YouTube channel on StockCharts for StockCharts. Make sure you subscribe, hit the notifications. When we go live next Thursday, you'll get a little pop-up on your screen. You can join us, Ask Q&A live on YouTube. So today, how do we think about when we think about a market recap? Boy, the volatility that we've seen in recent weeks and certainly in this week has been pretty incredible. I know looking at the CMT meeting last night, talking with some of the attendees, portfolio managers, analysts, and so forth, we had an interesting discussion. And again, there's just a lot of question in terms of, are we in full-on rally mode? Is tech leadership continuing? Are those themes just continuing to go? Is this the pause that refreshes before we continue on to new highs? Or is the distribution that we've seen up until today the beginning of something deeper, a correction in price and or time, some combination of the two that would cause further downside? And, one of the big takeaways that I think today is a good reminder of is that, until we see that pattern of higher highs and higher lows change, overall, the primary trend remains positive. And on most markets, that's sort of what we've seen. So let's look at the chart of the S&P 500, then we'll go back and look at the market recap, think about sector themes and different leadership trends that we saw today. So the last couple days, we sold off right to this real key line in the sand that we've talked about, right? We've been talking about this 3210 level on the S&P, which is the low from the end of December. When we pulled back to that, that's sort of the key line. As long as we remain above that level, from my read, overall, the primary trend sort of remains higher, right? Higher highs and certainly, at least higher lows, as long as we stay above there. What's happened since we sold off there the last couple of days, this week essentially has just been a quick reversal. And we've once again gone to a new closing high today, just getting above the high from a couple of weeks ago. So at this point, the S&P certainly seems like it's long and strong. The primary trend is positive. So again, you shouldn't have to worry about which way we're headed. As long as, again, for now, as long as we remain above 3210, the market remains in a positive trend on the equity side. Let's look at what's actually happened today. So the S&P finished up over 1%. There's a bit of a hiccup there toward the end, but overall remained in a, certainly in a position of strength. It felt like the NASDAQ up about half that, just under 0.5%. You see technology was actually middle of the road, underperformed today on an uptick because it was really driven by energy and then financials and then healthcare. I'm looking down at mid cap and small cap. Mid cap up just a little bit more, but small cap really was the strength, up almost 2%. So, talk about the feeling that the market is in a pretty strong uptrend. You finally had the participation of small caps. I think a lot of us have been sort of waiting for some sort of signal that small caps are actually participating, because all these up days had not included real strength from small caps. Really saw that today. Looking at sectors, I think the XLE, being the strength is certainly an unusual story today. If you look at the chart of oil, look at the chart of energy, we'll see if we have time to go through some of those, but I'd encourage you to look at the commodity space because you've had a big bounce in a lot of those. And if we look at the chart of the XLE, this is obviously coming from very depressed levels. It's something that was oversold at a time when most sectors are nowhere near oversold territory. They're overbought or very close to that. But all of a sudden, you see energy rallying very quickly out of a deep oversold level. So leadership today, but again, that is not a trend. That's just today's sort of pattern. I think the XLF is a really interesting one to follow. Sort of testing new highs, has not closed to a new closing high, but up 2% today, sort of double the return of the S&P. And again, if the XLF can be a part of it, I think one of the challenges was you had the market rallying without the participation of financials, and that can work. You certainly can have strength in stocks without as much participation of financials, but it's sort of unusual. To round out our just quick review of the markets, I did want to point out down here in terms of the Scooter reports, look at some of the names that are up a lot. One of the themes you're going to notice is a lot of healthcare, in particular biotechs. You have Biogen, Amgen, two pretty large cap biotech names up at the top here. So if we look at a chart of the IBB, which is one of the more liquid biotech ETFs, you can see that it rallied pretty good, almost to a new high around 123.50 intraday, pulled back a little bit, but still finished way above the open, back above the 50-day moving average. And I think biotech is one of those themes that if the market is going to work, if we're going to see sustained bullish move, you want to see participation in groups like semiconductors, in groups like biotech. These are ones that, biotech have been a little bit weak. And again, going into last Friday, we were looking at this chart and thinking, okay, it's a new like 3-week low. About like a new 2-month low almost. Is this sort of the unwinding of the biotech trade that had been working? But all of a sudden, it's holding up just fine. So I think if this trend continues, if you see biotech actually break, close above trendline resistance, close above 124, that would be a really interesting development. I also wanted to look at one of the semiconductor ETFs. This is the SMH. So again, pretty early on, this has started to break down on a relative basis, just bounced up this week. So if semiconductors are able to regain those highs, close to new highs, so the market going to new highs, do we see that confirmation of new highs from semiconductors and biotech? I think that would certainly support more of a bull case. Otherwise, this might just be a backing and filling kind of move that we've seen going into the rest of this week. So that is a very quick market recap. And again, I'd encourage you to spend some time on the market dashboard, on your dashboard if you have not done so yet. Look at some of the sector and group themes that have emerged here, because a lot of movement this week and a lot of question as to whether we will see a sustained up move in stocks. I want to move on to our next segment, though. So we talked about doing a 3-part segment, which was actually looking at what I called a pilot's guide to investing. And this came from some discussions I had with my flight instructor as I was learning to try to fly a Cessna 172, and somewhat successfully I was able to do so. I still have a good amount to learn there. But we talked about adapting some of those experiences into a three-part series. So I'm going to just reintroduce it. And again, if you missed the session yesterday, I encourage you to go to our YouTube channel, watch yesterday's episode of The Final Bar, where we had the first part talking about preparation and the idea of being prepared. But just very quickly to reintroduce this, I did my first solo. I was back in 2012, if I remember right. It was outside of the Boston area in an airport called Norwood, which is southwest of downtown Boston. Challenging airspace because you have Boston, Providence, and Boston is a pretty busy airport, and so you're actually underneath that airspace, and so there's a lot of really tricky communications and everything. But I was able to do my first solo there, and my instructor and I spent a lot of time comparing notes about stocks when we're flying around in midair. When you're by the ground and landing or taking off, that's when there's a lot to do. But when you're flying straight and level at 4,000 feet or so, you've got a lot of time to kind of chat with the person in the co-pilot seat. And so my instructor and I would actually talk about the markets. And I started to think a lot about the relationship between flying and investing. And to be honest with you, I always came back to the fact that the characteristics of effective pilots lined up very well with the characteristics of the investors that I'd known, the characteristics of successful investors. So what we've talked about over this idea of a pilot's guide to investing, what I see as three different points. The first step is to be prepared. So there's a lot of preparation. Getting in the air is something later in the process. You do a lot of work before you ever get up in the air, just to make sure that you know where you're flying and where you're headed and why you're going to certain places, sort of a timeline, an overall map in your head. And that allows you to be prepared for unknown circumstances, because you have a good sense of what to expect. The second step that we're going to talk about today is being aware. There's an awareness to flying and an awareness to investing. And I find unsuccessful pilots, and that is not a seat you want to be in, is an unsuccessful pilot, because things get very tricky very, very quickly, and you're in danger, and you have to act and react very quickly. But awareness is how you minimize the chance of something catching you by surprise. The surprises don't tend to be a good thing in the cockpit. Third is to be ready. So once you're prepared, once you have a good awareness of what's going on around you, you want to have an emergency plan. And tomorrow, I'm going to share with you some of the tricks that pilots would use to make sure that they're ready for unforeseen circumstances, emergency situations. So today I wanted to talk about what I call awareness, right? Which is being aware of your surroundings. It's funny, as investors, we tend to put the blinders on. We tend to sort of focus on our particular portfolio, our particular investment horizon, a specific security or type of security asset class that we're looking at. But I found the most effective investors have a good awareness of what's going on around you, right? What's happening in all the other places. At any one moment, you have the ability to buy or sell literally thousands of different securities, right? Tons of equities, ETFs, and to say nothing of all the other asset classes. So having an awareness of what's happening, what's working and what isn't, from a technical perspective, I think is optimal. That's how you optimize your approach. My own firm called Sierra Alpha Research, the reason why I called it Sierra Alpha Research was from pilot slang, SA, for situational awareness. And to explain why that's important, I will share with you a quick story of golfing with my father years ago. And we were basically at the tee box, a par 3 hole. We stand up. It's about 170 yards. My father, who can outdrive me, picks out like a 6-iron or something and is getting ready to swing it. And, in a vacuum, on paper, that's the right club for that distance. That's about what he should be hitting to get the ball right on the green, pretty close to the hole. But two things that he missed when he stood up and addressed the ball. Number one, there was a headwind. So the wind was actually coming at us a little bit. The second thing was the green was a little elevated, meaning he was hitting the ball uphill. So any of you that have golfed before, think about what those two things would do if you hit that perfect 6-iron shot on the tee box. The headwind coming at you, slowing down your ball. The elevated green means you don't have as much distance, essentially, and so you're right, your ball falls short, right? He hit it short of the green. So what that meant, he had the right club, he had the right toolkit, and I think as investors, a lot of times we have at times a proper toolkit, but we're missing the awareness. He didn't have a good enough awareness of what was happening around him to see that the conditions were a little different, and meant he had to adapt his toolkit for changing conditions around him. Now, as a pilot, what I'm showing you here is an image of what the Cessna 172 cockpit looks like. This is sort of the dashboard. This is the panel below, so you can see outside the dashboard. You can see outside what's happening around you. But this is the series of tools that you have to look down and use to fly the plane correctly. And situational awareness, that concept of what's happening around you, is incredibly important as a pilot. And my story with this was my first night flight. I'm flying through the air, and my co-pilot, or sorry, my flight instructor is looking. He says, "All right, if you look, around 10, 11 o'clock, do you see anything that's kind of important that you need to pay attention to?" So I look sort of, straight and to the left, and I look on the horizon. I don't really see anything. So I said, "No, I don't." And he's like, "All right, sure, around 10, 10:15, you're sure there's not something you need to know?" And so now I'm starting to sweat a little bit, and I look over to the left. Sure enough, I see an airplane kind of coming right toward us. So I mentioned it to him. He's like, "Yep, you're right. You're on a collision course." And so he pushed the yoke forward, pushed us down a couple hundred feet, took us right below this other plane. We came right back to our normal altitude and kept flying. The other plane never budged, basically didn't see us, and was continuing to go on. So the chances of us actually, connecting with another plane in midair, it's actually pretty hard to do because there's a lot of things to worry about. But he certainly avoided what could have been a very tense situation of us flying way too close to another airplane. And it was a beautiful reminder. I always thought back to that moment of situational awareness. What had happened was I was so focused on the instruments, on the map, on the kneeboard that was all in front of me, that I wasn't paying enough attention to the horizon, looking around and making sure that there weren't other planes or clouds or something that I was running into. It was a great reminder of the importance of having an awareness of what's happening around you. So, what does that mean for you investing? Well, I would tell you that the good news is if you have the StockCharts platform, which I'm sure most of you do, you have the ability to have a good awareness of what's happening around you. So, I always have coached my clients. Situational awareness as an investor means a good market awareness. It means you're understanding what's happening around you as an investor. So, my morning coffee routine, the routine that I use every morning, is going through the series of charts that you see on here. And this is just the bookmarks in Chrome, so you can get a sense of what it is. It starts with a long-term 5-year weekly chart of the S&P 500, then a 1-year daily chart of the S&P 500. So before I see anything about what's happening with the markets, I'm looking at a good long-term chart that helps me understand a long-term frame of mind. I want to make sure that I'm plugging into that time frame that I'm trying to win on. And as you go through the titles of these different lists, you can see that it's going through other asset classes, global markets, breadth, sentiment, ratios, and so forth. And if I follow each of these steps, it is impossible. It's virtually impossible for me to get caught off guard by what's happening with the markets because I've looked at all those visual cues. So my encouragement to you, I think the second step of awareness is to take the lesson of flying, where you have to have a good situational awareness around your cockpit. As an investor, you have to have a good market awareness, a good awareness of what's happening around you. Use charts and use the StockCharts platform to cover all of those different asset classes, all those different levers you can pull, so you make sure you're not caught off guard. So if you do want to sort of improve your routine along these lines, if you go on StockCharts to your dashboard, you can go to Manage Chart Packs in the upper right corner. Go down to the chart pack named Dave Keller Morning Coffee Routine. You can install this exact list into your StockCharts account. You can start with this. I'd encourage you to create your own and adapt what I've shared with you, but should be an interesting way to kick off this process or improve your process of market awareness. So that is step 2 of this 3-step process. Be aware. Please join me tomorrow on this show where we will talk about the third one, which is to be ready, talking about emergency preparedness. Folks, we're going to take a quick commercial break. We're going to be back sharing with you a little piece of my interview with Chris Ciovacco. He's a fantastic long-term strategist and portfolio manager. So I'll see you back here in 1 minute. Hello, everyone. Welcome back to the show. Thanks so much for joining us every weekday after the close here for the final bar. As a reminder, please keep your questions and your feedback coming to us anytime. You can get us at thefinalbar@stockcharts.com via email. Any questions are welcome, and we'll have a mailbag segment later this week. We'd love to answer some of your questions directly on the show. Wanted to introduce my interview yesterday with Chris Ciovacco. Chris is the portfolio manager, the founder of Ciovacco Capital Management based in the Atlanta area. We interviewed him yesterday and we came in town, interviewed him with a number of other fantastic strategists. What strikes me about Chris, I actually first connected with him on Twitter. He's prolific on social media. If you go to Twitter, go at Ciovacco Capital, spelled Ciovacco Capital. You'll get to some of his tweets, which are fantastic. He uses the StockCharts platform arguably much better than me and most of the other StockCharts users I've met. He's a power user. And so I've learned a lot from him just talking to him yesterday about how he looks at the markets. And he has a very long-term perspective, which I think is very helpful. And we talked about secular trends, in particular demographic trends, asset rotation, asset allocation, which I think you're really going to find interesting. So here's a snippet, piece of the interview that we had yesterday with Chris Ciovacco from Ciovacco Capital. Chris, you gave us 3 charts to look at, all long-term, which I love. The first one is looking at secular bull-bear cycles. What is that telling you?
It's telling us basically, and the visual pretty much speaks for itself.
Yeah.
You can easily make an argument that today looks very, very similar to the post-1950 secular breakout move, the post-1982 secular breakout move. You get 2 cyclical pullbacks in there. You can see it on the chart. It's marked. In the 50s, the first one occurs in 1953. The second one occurs in 1957. So 1950 is very, very similar to 2013.
Sure.
1982 is very similar to 2013. 1953 and 1957, on the chart, you can see it, 1984 and 1987 are very, very similar to the cyclical pullbacks that we had in 2016 and 2018.
Interesting.
So what this tells you is that your game plan has to adjust for the fact that the stock market could literally go up for until 2030, possibly 2035-ish when you look at demographics.
So interesting. So long-term looks fairly constructive. How do the demographics fit into it? We have boomers retiring and all of that.
It's amazing.
How does that relate?
It's amazing. We're all biased on that. We've heard our whole life that the boomers are going to get things upside down. We're switching over now.
Okay.
So the boomers, the mortality tables, unfortunately for the boomers, are telling us they're becoming less and less important. The millennials, if you look at when they were born and you project forward, and that's the strength of demographics, there's nothing gray here.
Yeah.
They've already been born.
The numbers are
the
there,
law
right?
of large numbers tells us the mortality, that's why the insurance business is so profitable.
Right, right.
The law of large numbers is in their favor. So how it's helpful to us. We just said that the chart, the first chart that we showed, told us that we're very similar to the 1984 to 1987 window.
Okay.
The millennials are in the exact same window that the baby boomers were in 1984 to 1987.
Okay. Interesting. Now,
And why is that important? They're in their peak spending and earning years.
that's exactly right.
So they can borrow money, they can buy houses, they can buy cars, and the other thing that's wonderful, their credit's fantastic. Credit scores are better than they've ever been in the United States.
Everything you just described could certainly propel the market much higher than the
It can
levels
propel
we're at, right?
it can propel multiples higher.
Yes. Yeah. Right. Now, the third chart you sent was more thinking about asset allocation.
Sure.
Thinking of stocks versus bonds.
Sure.
What are you seeing there, especially at a time when stocks, bonds, both sort of testing, pushing all-time highs?
Sure.
What does that ratio mean to you?
So why we're showing the 3 charts is really our approach is a weight of the evidence approach.
Okay.
So when you make mistakes in the markets is when you see one thing and you make a gut reaction and move. We hit a Fibonacci retracement level, it's time to sell. Well, maybe.
Yep.
You need to, so it's a weight of the evidence approach. The way we look at it is, does the first chart align with or contradict the second chart?
Okay.
Demographics align with. Does the third chart align with or contradict? It aligns with. How does it align with it? The stock bond chart is in a secular uptrend, clearly from 1982 to 2000.
Okay.
The demographic sweet spot for the baby boomers ends in the year 2000.
Right.
It means they're going to be more apt to buy bonds.
Okay.
And it means they're going to be more apt to spend less. They're moving out of their peak earning spending years.
Yeah.
We're losing the sweet spot. That is exactly when the stock bond chart goes into a long-term period of consolidation, just as we would expect from the first chart and the demographics.
The second chart, yep.
How the third chart's helpful today, if the first 2 charts are accurate and we have to keep an open mind about much better than expected outcomes walking forward, we would expect the stock bond chart to be making a long-term breakout, and that's exactly what it's doing.
Seems to be.
It hit resistance in 2000, it hit resistance in the same area in 2007, hit it again in 2015. bullish breakout in 2017.
Right.
Now we're retesting that breakout potentially. If it is successful, it will align with rather than contradict the other charts.
Yep.
The other thing that's great about it, it's helpful if it doesn't work.
Right.
If it fails,
yeah,
it tells us the other thesis may be a little dicey.
So we're almost out of time, but I'd love to ask with that first chart, which seems like a very constructive long-term chart, what would tell you that that's wrong? What is there a level, or is there an indicator, is there a pattern that would tell you?
There's tons of different things, but looking at that first chart, what would tell you, look at price behavior near the 200-day moving average.
Perfect, okay.
200-week, I'm sorry.
200-week,
200-week
yep.
moving average.
Okay.
You don't want it to look like the orange boxes.
Yep.
You want it to look like the secular trends. So if
That's
it
right.
starts to look like the orange boxes,
yeah,
then you have to start to rethink the thing.
Perfect. Chris, those are 3 solid long-term charts. Thanks so much for sharing them.
My pleasure, I appreciate it.
So that was just a 5-minute snippet of a really fascinating interview with Chris Ciovacco. And again, what struck me talking with someone like Chris is it was such a great, we talked about these long-term charts that in some way felt so disconnected from what the markets are doing right now, but in a different way, they were actually more meaningful than anything because it was a proper understanding of that long-term context. And I'm often asked about things like demographics, which are so long-term, they're such big picture themes, but again, what happens over the next couple of years is absolutely going to be, at least, in some pretty meaningful part, going to be driven by demographics and millennials starting to invest and what they invest in and how. And so those themes I thought were really, really interesting. Again, we have a much longer, deeper interview with Chris. We'll look forward to producing and sharing with you very, very soon. We, however, for the show need to move right on to the 3 in 3. So at the end of every show, 3 charts in 3 minutes. And if these aren't on your radar yet, I'd encourage you to pay special attention to them in the coming weeks and months. First is intermarket analysis, and I just wanted to bring this up. This is just to orient you. The S&P 500 at the top, year-to-date return, percent return of 3.5%. Then the TLT bond prices, then the USO oil ETF, the GLD, which is the gold ETF, and then the UUP, which is the long dollar ETF. 2 of these 5 are now positive for the year-to-date. And it's the stocks at the top, S&P 500, and it's the dollar at the bottom, up 2% over that period. All the rest of these, while still, kind of in a mixed bag of return profiles, none of them are at new closing highs this week. Those are the 2 that are closing at new highs. So chart number 2, if that is the case, if those are the 2 out of those 5 assets that are up and are at new highs this week, this ratio chart of U.S. stocks versus global stocks is going to look like this, going to new highs again this week. So this chart, I think, is a really interesting one. When this one has rolled over, especially here in September, October, again here at the end of last year, the question is, at some point, U.S. stocks have been such a consistent outperformer of global stocks. At some point, that theme is going to unwind. And again, I'm always looking for things like energy rallying today. I'm looking for themes that I think people are underprepared for, undercommitted to. So when they happen, they'll be caught off guard. Because when people are caught off guard, that's when they tend to pile in. That's when they start to be driven by fear, FOMO, fear of missing out. And that's what causes things to, causes inflection points, causes things to reverse very quickly. This trend continues to be positive. And even though we've had a couple indications that it might be rolling over, over the summer last year, again in the fall, and again at the end of last year, it keeps resolving higher. But I think this is an important one to pay attention to. As long as this remains positive, as long as it keeps going to new highs, you really don't want to have as much of an international allocation. You want to be focusing close to home as an American or as a North American-based investor. If and when that starts to turn, this is why I think it's an important chart to watch, then you certainly want to make sure that you have a good eye on where to go internationally. The third one is looking at the XLF. We looked at this a little earlier when I was doing the market recap, talking about leadership. And I think the XLF is an interesting one because it had sort of fallen off a little bit. And if you look at the relative strength 6 weeks ago, sort of down, right? Sort of underperforming. And then all of a sudden, just this week, jumping to new highs, back above the 50-day, testing a new closing high, and the relative strength just starting to turn up a little bit. So if that continues, I think that's a theme you certainly want to be aware of. And ladies and gentlemen, that's our show for today on a Wednesday afternoon. I want to thank you all so much for joining us every weekday after the close for the Final Bar. Please keep your questions and your feedback coming to us. The Final Bar at StockCharts.com is the best way to get a hold of us. Also follow us on Twitter at FinalBarS. DTV. Check out our YouTube channel for Stock Charts. You'll see all of our previous episodes. For StockCharts.com, I'm Dave Keller. Have a great night.